Salesforce stock, ticker symbol CRM. This stock is down 35% year to date, and today they will present their quarterly results post-market. This company is growing big time in revenue, but does that justify the premium stock price? PE ratio is sitting at 100, which is insanely high, even for a company that is growing with a 5-year compound annual growth rate of 25%. In this video, I'll show you everything you need to know about Salesforce. I will show you what Salesforce does, and I will show you my fundamental analysis to see if CRM stock is a buy or not. I'm very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. Please subscribe to join the community and to receive multiple analysis every week, where I will tell you everything you need to know about the stock market. So, what does Salesforce do? Salesforce provides enterprise cloud computing solutions, including Sales Cloud, the company's main customer relationship management software as a service product. Since I'm operating in this kind of business, I do know a few things about content relation management systems. And I can trust you, these kind of tools and companies are the future in marketing. And we also see this in the projected revenue for CRM systems worldwide. It's growing industry. Salesforce is the market leader in this industry with a projected 19.8% market share. The four major competitors are Oracle, SAP, Adobe and Microsoft. Salesforce breaks down its revenue into two segments. The first is subscription and support revenues. Subscription and support revenues are by far the largest income stream for Salesforce. This segment includes cloud service, software license and related technical support. The subscription and support segment accounts for 94% of Salesforce's total revenue, which comes down to almost 20 billion. The second largest segment, professional services and other revenues, accounts for the other 6% in revenue. The Americas contribute 14.47 billion, almost 70% of the total annual Salesforce revenue. Revenue from North and South American customers has increased by 22% over the past year, growing at a slower rate than the global average of 29%. As said, 70% of the Salesforce revenue is coming from America. The other 30% is coming from the rest of the world. And now that we know a bit more about Salesforce, it's time to check the historical stock price to see how it performed over the past years. On the 5-year chart, we see that CRM has a 81% return, while the S&P 500 had a 72% return. So you've beaten the S&P 500 on the 5-year chart. But please notice the big drop in stock price late 2021. On the 1-year chart, we see that CRM is down almost 27%, while the S&P 500 is nearly flat with a minus 1%. On the 6-month chart, we see that CRM is down almost 42%, while the S&P 500 is down 9.5%. A huge difference, and with today's earnings, I think it's very interesting to see what is going to happen with the stock price, since they are down a lot in the past couple of months. And with that being said, I think it's the perfect time to check the fundamentals of the company to see if they are a buy right now. Please keep in mind, this video is recorded pre-earnings, so this might influence the fundamentals of course. Salesforce is a 156 billion market cap company with a PE ratio of 106, which is way too high, even for a fast-growing company. This tells me that this company is overvalued based on the PE ratio. To be honest, I want to pay a PE ratio around 30 for this type of company, so this is the first problem I see. But the forward PE ratio looks way better at 33, which is more in line with what I want to pay for the stock. To be honest, I don't see the PE ratio hit a 33 in the coming months or maybe even years. Net earnings isn't increasing, and that's mainly because of issuing more shares, which I will show you later in this video. But with all the new shares, PE ratio is increasing and earnings per share are decreasing, meaning a higher PE ratio in the end. The profit margin is also very interesting. Right now, operating margin is sitting at 2.2% and profit margin at 5.4%, which is both below my minimum of 10%. When we check the historical margins, we see that gross margins are decreasing. Operating margin is going up and down a lot. And profit margin is also decreasing since 2021. This is something to keep an eye on. You want the profit margin to be above 10%, so right now a red X on this one as well. Return on assets and return on equity are also very low. You want these numbers to be above 10%, So again, a red X here. Unfortunately, it's the same with the return on invested capital. On the 5-year average, we see a 5.4% return. On the 12 trailing month, we see a higher number, almost 8%, but both are very low. You want these numbers to be above 10%. Also a red X, of course. The 12 trailing month revenue is sitting at 26 billion, and the quarterly revenue growth year over year is sitting at 25.9%, which is great. And now the good part of CRM, the revenue growth over the past couple of years. We see that it's growing quite nice and steady, so this is really impressive. In the beginning of this video, we also saw that the whole industry is expected to grow a whole lot more. And with Salesforce being the market leader, I don't see any problems with the revenue growth for the next couple of years. When we check the balance sheet, we see that Salesforce has a 10.5 billion in cash, which is enough to pay down a big part of the total debt, which is sitting at 14 billion. So that's a good thing. For me, it's very important that a company has an increasing free cash flow, since this is used to pay down debt, but also to buy back shares, do acquisitions, pay dividends, and research and development. Since Salesforce doesn't pay any dividends, I think they should buy back shares to increase the EPS, which on these terms decreases the PE ratio. But unfortunately, Salesforce does work the other way around. They issue a whole lot of new shares, which decreases the EPS and increases the PE ratio in the end. Next to that, they dilute you as an investor because your share becomes less valuable. And this is the difficult part. I do like it when companies buy back shares, but to buy back overvalued shares isn't maybe the best thing to do, since you are paying a premium price for your own overvalued stock. So this is the kind of a difficult situation, and I don't blame them that much because they raise capital to grow the business. And it makes no sense to buy back shares right now at these valuations. So the ideal situation would be the stock price to be fall down, so that the valuation is more justified. And then Salesforce should buy back a whole lot of shares. The EPS will increase, which attracts a lot of new investors. My final conclusion on this stock is that I really love the company and the business, but I don't love the stock. Salesforce is highly overvalued and revenue is increasing in big time, but margins, return on assets, return on equity and return on invested capital aren't that great, to be honest. For now, I'm waiting for the stock price to fall down big time, so valuation is changing and maybe the company will decide to buy back shares. I don't think it's a buy right now, and I'm looking forward to see the quarterly results. For now, I'm waiting. But remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I'd really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.